Mahantesh Sabarad is also joining us on the show. Mahantesh,
Oh,
wanted your take regarding the HDFC twins because they're really not participating at all.
I think that has been the case for the last 2 years, 3 years, or something like that. HDFC has been a rank underperformer among the financial sector peers, even if you take the banks. I think what primarily is affecting is the long delay we have seen in terms of the merger of the HDFC twins, and that's perhaps is weighing upon the overall sentiment of the stock. While the business outlook does remain as good as any other financial institution, as good as any other bank, the valuation worries are something that is weighing the stock down. HDFC, if you remember, as a bank, always traded at a premium valuation. One of the best, highest valuation multiples was what it always received. Somewhere the merger will try to actually rationalize that valuation. I think that is what is really happening. But yes, the underperformance has not been of recent origin. It has been there for like 2, 3 years or something like that.
so let's understand this valuation criteria, because our understanding is that, look, in the near term, yes, there would be a bit of a NIM compression that will happen because HDFC cost of deposits and HDFC Limited costs of deposits are different. But ultimately, the franchise is growing at 20% plus. CASA is fantastic, and the branch network will add up to their entire kitty. So why are markets so nervous?
I think the first point that you made in terms of NIM compression, okay, is something that is actually weighing upon the outlook ahead. And HDFC, in terms of its growth, unlike in the past, is not outperforming its peers by any wide margin. In fact, some of the other banks have really caught up with it and bridged the gap that the bank would have. The growth outlook, like I said, the growth outlook doesn't have a big challenge, but the other peers are catching up. Therefore, the valuation premium or multiple that they used to get is getting compressed. NIM compression is the first thing and foremost thing that will really affect the sentiment. Growth outlook, which in terms of the credit growth outlook, overall credit growth in the economy is somewhere around 16 odd percent. HDFC probably is just about beating that, or there were periods where it was actually underperforming. But having said that, the stock is not, or the company is not doing anything great or different from other peers for it to receive a valuation premium.
That's about the HDFC stock. Let's take a look at some of the other names as well. So JSW stocks have been in focus. JSW Holdings, of course, has been high by around 12%. Now you also have JSW Energy, which is perking up, and that's the exclusive story that we have been bringing you, that Mr. Sajjan Jindal might be looking at picking up stake in MG as well. In fact, if we can, let's go across to my colleague Ajay, because he's been picking up those exclusive stories. What would it mean for the entire JSW group, and could it really disrupt the EV space? Ajay, tell us what's the latest you're picking up?
Well, that's correct. We told our viewers on April 24th that Sajjan Jindal and his group are circling a big chunky stake in MG Motor India. Today, of course, JSW Holdings is gaining 7% in trade, along with JSW Steel and even to a certain extent JSW Energy. But let me tell you that our sources said that the listed entities may not have anything to do directly with this transaction. What we understand is that it's the family office of JSW, of Sajjan Jindal, which will be picking up anywhere between 45 to 48% stake in MG Motor India. And they are not only looking at MG Motor India, they are even looking at some of the other EV companies like BYD, etc., as per our news. But right now the focus is on MG Motor India because of its EV capabilities. It is still expanding its capacities, and MG Motor India does require funds. The entire company is valued close to around 24,000 crore. So 48% will be picked up by Mr. Jindal and his family office, and rest around 4 to 10% would be with employees and dealers of MG Motor India. Our sources say so. This way the transaction would be structured. Remaining stake will be held by the main company, MG Motor parent China. So what happens this way is the Indian companies, the Indian owners, including the dealers, employees, and the larger one, in this case Sajjan Jindal and his family office, will hold over 15%. So the the necessary condition that 51% should be with Indian ownership, that gets satisfied, and we understand that it is actually moving forward. In the next few weeks itself, a transaction could be announced officially. Indirectly, what it does is for the group, which has got very big ambition in renewable energy, green energy, and JSW Energy could be the vehicle. Indirectly, the benefit would be going there, but directly there is no like-to-like comparison. It is important because JSW Group is one of the largest groups among the top 5. Their direct entry into EV, apart from the traditional auto companies or even startups, so this is likely to shake up the ecosystem and invigorate the entire ecosystem definitely. But this is a very interesting story which is developing, and we understand it's moving forward very speedily.
Mahantesh, what is the best way to really bet on this entire EV transition? Should one buy Tata Motors? Should one buy a battery company? Should one buy both? What is the best way? I mean, everyone's convinced that EV is real. Everyone is convinced that EVs will grow. What is the best way to bet on it?
That's a good question you have asked, because in the entire value chain for EVs, it's not just the automobile manufacturer who tends to benefit in terms of the overall growth spurt that you will get. But I reckon that value chain for essentially battery makers will be far more better, both in terms of percentage as well as overall volumes, relative to an automobile company. Because finally, for an automobile manufacturer on the EV side, there are other associated value inputs that or the inputs are actually cost. The value inputs will be considerably high. Branding is one of them. So I wouldn't like to play any of the automobile companies simply because there is an EV focus that is coming on into the company. Mind you, most of these automobile companies in the initial phase will have a high cost structure for manufacturing an EV with low volumes. That means essentially their capacity absorption capability will be very, very poor and will reflect very poorly on the margin. This has been the traditional case with automobile companies whenever they introduce new products. Only when the break-even volumes kind of reach will they be turning profitable, will they be able to deliver better on the margins and capture the larger share of the value chain. But battery manufacturing is the way to go to, and there are very limited such companies actually in India capable of having a full spectrum battery manufacturing capability here. So in the listed space, in India, it is very poor. And EV is not the strategy that an investor should have for an automobile company. The outlook for other traditional IC engine companies could turn out better.
Vinay Rajani also joins us. Vinay, what is your sense on when markets will make a new high?
Yes, definitely. If you were to look at it, today's close is the highest close in the upward run, and previous high is not taken out on an intraday basis. But if you were to look at the close, it is the highest close, and small cap is continuously showing strength. Bank Nifty is a concern which is moving in the 1,000-point range for last 4 weeks, but it's just a matter of time. I believe that overall breadth of the market is very strong. Sector rotation is suggesting that Nifty should make a new all-time high, and overall target that we have in our mind is 19,000, which comes out from the upward sloping trend line on the monthly charts. So we believe that Nifty is headed towards the 19,000 target, and overall we may remain good in the coming times also. So overall 18,400 to 500 is a strong base for Nifty, and 19,000 is the immediate target that we are looking for. So overall, yes, we are bullish, and stock specific also, there are a lot of opportunities, lot of fresh breakouts which can be seen on the mid cap as well in the large caps category also. So yes, we are bullish with the target of 19,000.
Talk to us about a couple of these counters as well. KPIT Tech, last 2 days has been under pressure, and Tata Consumers, that's just trading in another orbit. Vinay, the question is for you.
Yeah, sure. So Tata Consumer, Tata Coffee, both the stocks are rising with the momentum significantly. FMCG sector is performing well, and Tata Consumer is on the verge of breaking its all-time high. So the previous all-time high adjusted chart is showing that 870 was the previous all-time high, and now it is on the verge of breaking out from that level. So clearly, it is a bullish triangle breakout on the charts, and it's not only a daily chart; it's a monthly chart. So long-term breakout is there. The sector is doing good, so it is looking exceptionally good on the chart. So it can outperform the sector as well as the overall market. So as of now, momentum is there, and this kind of stocks can give good return in the short term also. Looking out the KPIT Tech is into a profit booking phase. For last two sessions, it has been falling with the rising volume. So it is into a profit booking phase. The next support I see in the KPIT is around 975. So around that level, there is a strong support from where it could bounce back. So primary trend is up, but short-term correction is there, which could take this stock towards the 975 odd levels on the downside.
I'm looking at some real estate stocks here, and now I'm just looking at Prestige, DLF, Max. I want to look at Bombay Dyeing also. Right outside office, I understand that there is a new development which is starting in terms of where the real estate development will happen. There you go, Bombay Dyeing. Watch out for this one. A lot of HNI investors have just checked in into Bombay Dyeing in terms of what the real estate development there seems to be, emerging. What is reversing today? Zomato. What has reversed already? Keynes. What has reversed? I won't say it's reversed, but it is underperforming. I think is HDFC AMC. But one stock which in a sense has been a poster boy of this entire summer rally of 2023 is Bajaj Finance, and today that one is taking it easy. Kunal, Bajaj Finance down 1%, just 1%. It's okay, but down.
Yeah, down, but again, even this stock has been very sideways, Nikunj. Over the last, I think, 8 days, the stock has been trading at a band of 7,050 to 7,200. So 2% band approximately for Bajaj Finance in the last 8 odd trading sessions. Again, indicates that the large cap arena is a bit mixed in terms of a lot of stocks consolidating. So I would still believe that maybe Bajaj Finance can come back towards 7,050 mark. That could be an opportunity to go for a contra buy. But again, not expecting any kind of a major up move or a breakout pretty soon for these stocks. So just about a consolidation which will continue for some more time.
Mahantesh, I can understand why HDFC Bank is not moving higher. But is there a specific reason why Reliance is not moving higher? Because what we understand that these flows are ETF flows, which essentially follow a benchmark and a weightage. And in every benchmark, if you are investing via the ETF route, Reliance will have a presence. It could be 8, it could be 10, it could be 12, but Reliance will have a benchmark. Reliance will have a weightage. Yet Reliance, at a time when flows are back, is underperforming. Why is that, Mahantesh?
So, if you look at what really triggered the Reliance growth, you have to go back to the rights period. Now, rights period was the time when Reliance outlined a vision that they will become zero debt soon, and pretty soon they did achieve zero debt. There was a combination of the rights issue money flowing in. There was a combination of new money flowing into some of their subsidiary ventures, primarily Geo platforms. And that made the company for a brief period of time debt-free on a net debt basis. But then gradually what has happened is again debt has creeped up. In the last year or so, debt has again creeped up to the earlier peak levels that used to be over 3 lakh odd crores in rupee terms has now crossed 1 lakh crore in terms of rupee terms. So that phase of net debt being zero had propelled the stock higher, and thereafter the underperformance that we are seeing on Reliance has got to do with the same issue because the debt has crept up. Having said that, Reliance has been posting nearly steady results. It's not posting any disappointing kind of results in whichever segment that you take, whether it is oil to oil and gas and chemicals to even retail ventures. They are doing well. So what you outline in terms of major funds, major ETFs having that necessary weightage on Reliance, who should take or propel the stock as much as the Nifty does over a period of time is perhaps not happening because there are other funds who are trying to become a little underweight, shedding of the excess weight that they gathered because the stock had rallied earlier. I think that's the only phenomenon. There is nothing to fault in the company's performance right now or in its growth outlook ahead. It seems quite steady. And once again, the focus will be on the debt.
Nothing to nitpick when it comes to Reliance Industries. And finally, it seems to be breaking out a bit today. It has hit a 5-month high on an intraday basis, Reliance Industries, that is. Let's see where it heads. Just wanted to flag out the cues that you need to have on your radar for tomorrow. Of course, the biggest one is the FOMC rate decision, which will be out later tonight. The street is working with a pause at this point of time, but the changes to the dot plot as well as the commentary coming in from Fed Chair Jerome Powell would be important to track. We'll also get the crude and oil inventories and the PPI data coming in from the US. Other than that, the other important bit really to look from the corporate action point is Wipro, because tomorrow is the last date to buy, to be eligible for the buyback if you want to tender your shares for the buyback. So that becomes important. And then there are a few names, the likes of Satin Credit Care, which are going to consider fundraise, etc. And there would be a stock split on Varun Beverages. So we might see a technical adjustment there. But largely, these are the cues. But Vinay, just given the fact we are, ahead of a big event, and as you pointed out, we are likely to close at record high levels, what would be the best strategy? Take the profits off, you continue with your long positions?
I would suggest that we should continue with the long positions. There are stocks which are outperforming and we can opt for those stocks. I'm not asking people to hold all the stocks or all the entire set of stocks, but there are few stocks which are looking extremely good. FMCG stocks are there, some infrastructure stocks are there, and oil and gas sector is today performing well. So selectively, I am bullish for tomorrow. So even though something comes out negative, there are some stocks which can, even after gap down, can reverse on the upside. So there are some opportunities on the upside. So Nifty for sure I am bullish, and I would suggest that one should continue to hold on to the long positions.
Two stocks which have seen a sharp spike, and I think Relaxo is one such case in point. There's also Godfrey Phillips, if we can just bring up that intraday graph. Relaxo has seen a big spike in the last few minutes, 4.25% higher, and Godfrey Phillips as well has had a good last 1 hour, 3.25% higher for Godfrey Phillips as well as we speak. Kunal, anything unusual on the charts? Relaxo especially, but I don't know if you're tracking the charts or not.
Yeah, I do track Relaxo. And I think it's a good setup over the last 1 or 2 months. I remember, I think, tracking the stock when it had shot up to 800 in a matter of, I think, 3-4 trading sessions from 750 mark. The volumes at that time were almost at a multi-month, multi-week high for Relaxo. The stock had just broken past above its 200 DMA in that leg of an uptrend. And I think post that level, we've seen the stock making a consistent pattern of higher highs and higher lows. Today, the charts could be a lot more interesting as well as better, because the stock has confirmed a breakout of its 200-day moving average. So something which started off 2-3 months back for Relaxo from those 800 levels, now moving on to 900, is a very good sign of a trend in the making. So I would expect the stock to continue to move up higher. And with this surge in volumes or this consistency in volumes, we can expect at least another 10% move from current levels. So 980, 990 could be a next target for Relaxo.
Okay, so that's about Relaxo, but let's talk about the stock ideas for tomorrow. Vinay, what's the BTSC idea?
Yeah, so one can go for Dabur India. FMCG sector is looking good, and Dabur India has given a fresh breakout after some consolidation. So it looks good for the BTST with a stop loss of 550. And second stock I would recommend is the L&T Larsen and Toubro. It has not moved significantly today, but overall trend is very strong, and last week's close was very convincing. So considering the overall trend, I am suggesting long in L&T with a stop loss of 2290. And third stock which one can look at for BTST is the ONGC. So ONGC has witnessed some correction and again resumed its primary uptrend. So keeping a stop loss at 155, one can even go long in ONGC.
BTSC trades?
Well, bet on large cap names, and I think Reliance Industries looks attractive at a current juncture. So would suggest a buy on Reliance, targets of 2,600, stop loss at 2520. And TCS is the stock which I would believe for a contra opportunity. The stock in the last 2 or 3 days has formed two interesting bullish candlestick patterns. So this could probably be an indication that a near-term bottom could be at place for TCS. So would go for a contra buy, targets of 3,350, stop loss at 3,200.
Okay, so that's about the best bets coming in. Kunal going with large caps, TCS as well as Reliance. But talking about the other stocks that were buzzing in the trading session today, because we're just towards the last couple of minutes of the trading session, you had FACT of FACT, which is higher by 15%. Philips Carbon has made a good move, 8% higher. Aster DM Health is the other one, Galaxy Surfactants, Rain Industries, Shyam Metallics. So the list of gainers is fairly large. On the losing side, Zomato is the one that is really, catching attention. 6% cut coming in there. Mahantesh, do you have a view on Zomato?
That was a very difficult stock to track, actually. The price, not only are the pricings very wild, even its financial performance swings are very wild. And there seems to be, at least in the near term, not much visibility about its return to profitability, although there are certain people who are very hopeful they would. Let me clarify by saying that over a long period of time, when I say long period, that means over a 5-year period or plus, Zomato is a strong player, is a player that is here to stay and will eventually deliver profits which are going to be quite sustainable. So, from an investor's point of view, whether today is the right time to enter the stock or not is a difficult question given the current wild swings that they have both on the stock price as well as on the financial performance side. I would rather put in my analyst head on the stock 2 years down the line and see whether there is much stability there. Probably the returns thereafter could be meaningful.
Let's begin winding up for the day. Mahantesh, good to have you on the show. Thanks as always for joining in. Vinay, Kunal, we'll let you guys go as well.